All right. So this was the June 20th trade recap. Today I took a trade off of a swing low on the 15-minute market and another swing low below this. This was done during the overlap between New York and London session, I believe. This is when I executed right here just as they were beginning to merge. So as you can see, price got taken, or a swing low took out the previous swing low. So this was the better swing low. Price shoots up, forms an equilibrium, and then price retraces down into this order block here. This one big red candle forms an order block. Price retraces into that. Price shoots back up, but I did not take a trade off of that. Actually, I waited until price broke structure to the upside, and then we got a fair value gap on the 1 hour, I believe, price, and then I was able to get a retracement off of the break of structure. Obviously, I should have entered as soon as price retraced out of this order block, as I'll discuss later, but I ended up taking um, my entry as price broke structure to the upside after retracing into this order block here. I placed my stop loss below here, or sorry, below here, and my take, or sorry, here, somewhere around here, or maybe up here, and I put my take profit right here, targeting this previous area of liquidity. And I risked 0.5%, and so I made $500 I made $500 off of this trade. So the way that I could have traded this better is obviously I could have had a more ideal entry, which would have been instead of all the way up here, although I did get an entry off of a fair value gap, I could have just gotten it right the first time and gotten my entry as soon as price retraces into this order block right here. As soon as it breaks structure, I would be good to go within this order block. It would also be within equilibrium, which this is not. And if I had done that, I would get a much better up to 2.42 RR ratio. Another thing I could have done, which would have made a small impact, is I could have placed my take profit up here instead of down here. That also would have made a slight difference, and slightly that would have gone from 1.9 to 2.4. That wouldn't have been a significant change, but it would have been something. And I regret not entering the trade earlier and placing my stop loss higher, which I could have done looking at the chart. Another thing was that news came out, although there was a lot of medium impact news, and the news weakened Canada. The forecasted percentages were less than the actual percentages, which was bad for the currency and was likely one of the factors in the USD Canada uptrend right here. One thing I didn't do this time is I didn't really trade with the overall macro bias of USD Canada, the macro bias being bearish right now, as you can see. And that's because this strategy it's executed on the 1 minute, and it works with price action, so it really doesn't need a macro time frame because it's just such a short-term trade that this bullish trend right here is that's going to be the trend that I'm taking a trade off of instead of the giant bearish trend. Um, I think that pretty much covers almost everything. I just believe that I just believe that this new strategy would work a lot better for me, given that I'm returning a little bit more to TJR's original trading style instead of jumping into some new, quite different trading styles, thinking I was like good enough for the previous one, and that I find that just returning back to a proven strategy, even though the strategy isn't super exciting, I find that it works some of the times, and if I can execute well, like I could have, it could have worked out really well. So that's where I'm at right now. I believe I'm very close to break even in my paper trading. balance. I'm slightly above break even, which is great. Um, Even though I only lost like $2,000. So, thank you for watching. This was April 20th, 2025, USD Canada.